Electric vehicles will undoubtedly be crucial to the development of urban transportation and the reduction of greenhouse gas emissions. Under the International Energy Agency's Sustainable Development Scenario, there may be 230 million vehicles on the road by 2030, up from just 10 million the previous year. The rewards for the victors may be very substantial. According to Bloomberg, there will be a $24 trillion market opportunity between the years 2020 and 2040. The question is whether Tesla will succeed in the long run and whether it is a good investment. I would contend that it isn't, based on its price. The advancements being made by its rivals, the firm's lack of actual earnings and its lack of long-term strategy. Let's talk about the ludicrous valuation. The outrageous price tag for Tesla is the most obvious reason not to purchase it. Vehicle sales of $31 billion in the year to March are comparable to the current market valuation of $967 billion, or 31 times that amount. Only 587,000 Tesla vehicles were delivered through that time frame, with an average cost of just under $53,000. Even after taking into account that it will take several years for the Model 3 sedan and the Model Y compact SUV to reach full production, the yearly production will still be less than 1 million units. Due to fewer sales of the more costly Model S and Model X, the average selling price will be lower. By 2024, Tesla's yearly revenues may reach $47.5 billion, which is still less than a 20th of the company's present market value, if it can make and sell 950,000 vehicles annually at, let's say, an average of $50,000 each. Compare these numbers to well-known automakers like Ford, which produces the F-150, the world's best-selling vehicle, and Volkswagen, one of the largest investors in electric vehicles. Ford and Volkswagen both have an annual revenue of $130 billion and $250 billion respectively, but both these companies are only worth 0.5 times sales. Price to earnings ratio of Ford is 4.56, and for Volkswagen it's 4.34, and with Tesla that number is 111.17. Yes, you heard me correct, 111.17. This value gap will inevitably decrease as mainstream automakers' ratings improve and Tesla's fall until they reach some sort of equilibrium as these and other manufacturers increase electric vehicle production and grab market share away from Tesla. After dominating the electric vehicle market for the majority of the previous decade, Tesla is finally up against real competition. 18 of the top 20 producers in the world intend to increase its production of electric vehicles quickly. Already Tesla are losing market share. Credit Suisse, an investment bank, reports that the company's global market share of electrical car sales fell to 11% in April from 29% in March, as it lost market share in China, Europe and the US to new rivals with less expensive models. Tesla recorded a comeback in May after its Chinese sales fell in April due to production problems, but local electric vehicle manufacturers NIO and Xpeng outperformed it, with deliveries that increased by 95% and 483% respectively. Ford is moving forward with its Ford EV program in its home market on the strength of the hybrid F-150, Mustang Mach SUV, Explorer hybrid SUV and Escape compact SUV. As well as an increase in the average selling price, sales of electric vehicles increased by 184% in May. New competitors, Lucid and Polestar, have introduced high-performance versions at the top of the market, while Apple, which has been considering an EV launch since 2014, is in talks with Chinese companies CATL and BYD to provide batteries for a 2024 launch according to rumours. Tesla supporters may at least point to last year's first quarter over $1 billion in profit, which were higher than anticipated. Tesla, however, does not use GAAP generally accepted accounting principles in the presentation of its financial data. According to GAAP, net income was $438 million, which is $60 million less than the reported amount. In addition, Tesla received $518 million in regulatory credits during the quarter and recorded gains of $101 million from the sale of Bitcoin. So the vehicle manufacturing industry really lost money, as it has done ever since the company entered the public market. Yes, that's correct. An electric vehicle company that's never made profit from manufacturing vehicles since it went public. For most of the previous 10 years, Tesla has had virtual exclusive access to the electric vehicle market. Nevertheless, although using this period well to expand, Tesla has never had a comprehensive strategy. Instead, a strategy is created as needed. The production goals are fired off, but they are usually missed. Range is mentioned as being the utmost important, then it isn't. The Model S Plaid was made available for advance orders, however the program was later discontinued. The company just launched the $130,000 Model S Plaid, which has a 0 to 60 time of less than 2 seconds with a top speed of 200 miles per hour, which is completely absurd considering that the majority of electrical vehicle buyers use them for commuting in cities. After applying for 3 new trademarks that broadly include restaurant services, self-service and take-out restaurant services, which makes little sense from a business standpoint, there are clues the corporation wants to build a lifestyle brand. However, the mass market automakers are also spending tens of billions of dollars to make electric vehicles the focal part of their long-term plans. Volkswagen earlier this year outlined a picture of the electric car as a component of a larger energy ecosystem that is connected into homes and public buildings, enabling customers to be grid independent while lowering emissions. In my opinion, the price of Tesla is completely absurd, especially when comparing to their main rivals. Please choose your investment strategy wisely. Thanks for watching and please subscribe for more.